Hello and welcome to this Power50 webinar. My name is Polly Jean Harrison and I'm features editor over at the Fintech Times, and I'm thrilled to be here today on behalf of the Power50 to present this discussion. So today we're going to be talking all about financing. So financing is proving continuously relevant in the modern day, both the everyday consumer as well as businesses, particularly SMEs. Whether it's forms of alternative financing like buy now, pay later, or more traditional lending like a personal loan, financing can come in many forms and can be a great aid in helping both consumers and businesses afford what may be out of their immediate reach. So this discussion today is going to be looking at the current state of the financing market and the innovations that are present, as well as examine how financing products can help aid in financial inclusion. So I'm thrilled to be here today with Roger Vincent, the Managing Director from Trade Ledger. Roger, how are you doing today?
Very well, thank you, Polly.
Fantastic. Thank you so much for joining me today. I'm thrilled to really get into this topic with you. I mean, just to kick us off, would you be able to sort of give us a brief overview of like yourself and the kind of things that Trade Ledger does?
Yeah, sounds good. So Roger Vincent, as you said, MD of the UK business here at Trade Ledger. I've been with the business 4 years and I helped to launch the UK business where we brought the headquarters across in 2016. We were originally founded in Sydney. And I'll come on to give you a bit of an overview about what we do with banks and lenders with our lending technology. My background is roughly 15 years in financial services with a variety of different banks, including Barclays, Lloyds, and a big stint at a credit bureau called Equifax. So experienced the full range of how data, technology, and insights or analytics can be used to help consumers, SMEs, and much larger entities get access to the finance they need through potentially the use of data. So yeah, I've been in this industry for quite some time. And now at Trade Ledger, we are really focused on helping to unlock data through the use of technology and APIs to streamline or open up working capital and other types of lending products to slightly larger entities. So the SME market or the mid-market, as we call it, not quite the top end of large corporates, not the smaller end of sort of single business or sort of 5 to 10 people companies, but really that kind of mid-market where we believe the biggest gap is within the global economy. And obviously we can drill those numbers down to the UK specifically as well, where we've got about 6 million SMEs and about 40 to 50% of those are classed as SME or mid-market companies.
Amazing, great stuff. And obviously with your background, you're the perfect person then to be discussing financing with me today. So I feel like financing in general is one of those funny words, isn't it, that like makes a lot of sense, but actually when you say the word financing, you don't quite really know what it means from like a layman's perspective, obviously. It would be great for you to just give us a really sort of overview of the current state of the financing market. What are we looking at? Who is benefiting? Just, yeah, what's the market looking like right now?
Well, I think if you look at kind of the consumer space has undergone, I suppose, what we call a lot of digitization. So every bank has undergone kind of a 3-year transformation, which they repeat time and time again. And I would say that we've made big inroads, but to the end consumer, until recently, we've only ever seen the financing products that we're used to, right? If you want to go and get a loan, it's either a personal loan, a credit card, an overdraft, or if we're looking at kind of purchasing a property or a car, we would get kind of a leasing contract, hire purchase, PCP, or we would get the mortgage for the property. So as consumers, I think we're used to seeing the products that we see. I think what we've seen recently with some of the emergence of the buy now, pay later is really just a variation of that, right? It's actually the same products just appearing in a different way and being delivered at the point in time that we actually need them. So instead of getting some finance before I go shopping and having a credit card in place before I buy the pair of trainers, now I can turn up on the online shop for the trainers and I can actually get that finance there and then at the point of sale. So really the products haven't changed. Buy now, pay later is really just a traditional installment loan or a personal loan. It's just positioned in a slightly different way. So I'd say that the consumer space has kind of taken a natural progression, and digitization of traditional products is starting to appear, but really it's a different type of packaging that we're seeing, and we're seeing kind of all different types of new entrants coming into space, and massive overlap, I would say, between lending and payments. So when you make a payment, is it a lending product or is it a payment product, right? They're being positioned as payment products, but they're really lending underneath, because you're paying them back over time. And that's what the likes of Klarna are, or PayPal Credit, and other solutions. So that's a consumer space. On the SME space, unfortunately, they're in a bit of a difficult situation, right? If you log on to any commercial or corporate website, they don't just get 4 or 5 products that are positioned to them. They get about 20 or 30. And a typical product might be called reverse factoring. Now, who on earth knows what reverse factoring is, or confidential invoice discounting? The products that are positioned in commercial and corporate are not as simple to understand as you and I understand a mortgage or a personal loan or a credit card. Which means that, I suppose, in the SME banking space and the commercial banking space, the digitization has yet to kick in. And we like to refer to it as kind of the area of banks that the internet forgot, right? They're still using spreadsheets, they're still using really outdated terminology, there's no real standardization. So that's the market that we're kind of in. And I think whilst we understand that they're well behind the times, what we're starting to learn from the retail segment or consumer lending space, we can carry through very, very rapidly into the SME and commercial lending space. And you start with the simple products. A commercial loan is very similar to a personal loan. It's just guaranteed against the director of a business. But when you start looking at kind of other forms of working capital, the considerations start to become a little bit more complex. So yeah, I'm excited about where that goes, but the current state is not particularly good in the UK or globally for kind of mid-market working capital solutions or commercial lending.
Yeah, that's really interesting. I didn't realize that there was such a sort of big, like, different products here. And yeah, all those different product types you said, I would have no clue where to start. And luckily I don't have a business, so that's probably a good thing to navigate. So I guess, obviously with the situation being what it is and how the market currently isn't completely 100% fit for purpose, what technological innovations have there been then to try and help with this and help get the market to a place where actually, no, it's very easy to get the kind of financing that you need, no matter whether you're a consumer or a business?
Well, I think me coming from the data background, right, and Equifax was a large credit bureau, and there's credit bureaus that exist. So we know that when we go onto a price comparison website, you can do sort of a soft search, as it's called, and you can kind of very quickly realize as a consumer whether you're eligible for credit. And now there's all sorts of free scores out there that allow you to get access to your credit bureau data or your credit score, like ClearScore. You can readily available at the touch of a button. So we know that's been around for ages. Now we've seen kind of open banking driving access to your bank account data. We've seen similar innovations in sort of the accounting space, where you can easily share your accounting data if you've got kind of an online platform there. I think the common misconception within banking and within commercial and corporate banks is that the data doesn't exist on the SMEs because it doesn't reside in traditional places like the credit bureaus. Now, we fundamentally disagree. We think that actually all the data does reside out there. It resides on all of the different business applications that you use within your business. And with the right technological innovations or the right technical capabilities, you can just access those through APIs. So the technology has existed for at least 10 years now in terms of kind of plugging yourselves as a bank into other data sources and really aggregating that data to understand a business, much like you would understand a consumer. It just means you've got to work a little bit harder. Instead of just going to a single credit bureau, you have to go to Companies House, or you need to go to their accounting data, or you need to go to another specialist kind of aggregator of data to understand who that business is. And they tend to be more complex. But needless to say, the data is out there because we're aggregating it, and the impact that can have on sort of understanding the end borrower is absolutely enormous. You can go from obviously streamlining applications, you can understand risk in a better way, you can improve the customer experience. So that's kind of the journey that we're on. How you tackle that as a bank is up to the strategy team. How you tackle that as a fintech might be a little bit more specialist, but people are really starting to do that. And I think it's refreshing to now turn up to a bank and they kind of know what an API is. They know what a technology platform is. They know what a lending platform is. Really kind of the last bastion that we need to overcome is, okay, let's understand all of that data that's going to be made valuable to you. And then you need to go around the banks and say, okay, well, don't just jump to AI and machine learning. Why don't you just aggregate the data first and then kind of build towards that? Likewise, don't just jump towards blockchain and crypto-based lending. Take some iterative steps to move from your Excel spreadsheets into kind of semi-automated lending and then potentially into automated lending in the future. And that's a journey that we go on with banks, using our technology as a bit of a platform we call it data-driven lending, but it's a platform to unlock data-driven lending through APIs and connections into other third-party data sources.
Amazing, and that's really interesting. That's a really interesting viewpoint on the whole thing. I think, yeah, with banks, there is that tendency, isn't there, to just like, oh yeah, we'll do AI, oh, we'll do blockchain because those are really trendy things, but actually take a step back, walk before you can run, almost, sort of thing.
Yeah.
I mean, leading on from that, you've kind of already answered this question, but I'm going to ask it anyway. But how has fintech disrupted the traditional lending market? You obviously said just then about kind of the things with the data, but how else is fintech really sort of disrupting this market and making it better?
I think what fintechs have done really well is create propositions that are specifically created for a certain segment. So if you take the buy now, pay later segment, for example, that is probably the most successful elements of where we've seen payments providers provide credit against a payment. Because it's mass market adoption, it's just there for the taking, right? You know that payments is a general capability that you and I expect. And if I can pay in installments rather than pay all of it up front, it gives me a little bit of personal working capital, as I like to call it. That means I can kind of extend my capability to live or work in that month, right? I can wait for my paycheck to come in. Connected to that is some of the guys that do salary finance. So if you want an advance in your salary, I think they've done that really well. Connected to that are some of the kind of SME lenders that have started to do kind of unsecured loans. So the iWalkers, the Cabbages originally did this across in the States. So I think you've seen pockets of fintech innovation that have really been successful in creating a proposition for a subset of consumers or a subset of SMEs. And as I said, buy now, pay later is probably the most applicable and probably the most easy to consume for you and I as a consumer, hence why it's seen mass market adoption. And we've seen the success of Klarna and kind of PayPal credit, etc. Now, does that create scale in the way that challenges the large banks? Probably not overnight, because the nature of obviously kind of targeting a certain segment with a certain product means that you're only capturing a certain amount of the market. But I would say that consumer banks, the kind of bigger banks in the market, have become quite scared of the mass market adoption of buy now, pay later. Hence why that's become quite a big part of the latest hype cycle, for instance. But I think they are sitting and waiting and watching to see what other products emerge that could have that same mass market adoption or the same applicability to potentially disrupt the, I suppose, market share that these large banks have got. So in summary, I'm really impressed with what I've seen from some of the fintechs, and they have got clearly, some of them have got massively scalable models, but I think some of them have been limited. So they've pivoted halfway through their journey to say, okay, well, we've consumed as much as we can in this market. Now we need to start to partner with banks to actually offer up our unique product to that bank. And that's what we've probably seen over the last 3 to 5 years. Maybe over the next kind of 5 years, what we're going to see is the banks fight back and say, okay, well, I now have learned all I can from the fintechs, and now I know how to build these products myself. So I know that I can create a product that has low operational costs. I've learned how to act, how to talk, how to walk, how to build like a fintech. And I know that that's not now part of my transformation journey. That's part of a dedicated wing that sits in a separate part of the bank that helps me to protect the market share that I've got. So I think we see a lot more collaboration now between banks and fintechs. We see a lot more banks being confident in their build strategies, or we see banks investing in other fintechs with a view probably to buy them or to integrate them in the future.
Yeah, definitely. I think at the moment that's pretty much all we're seeing, and especially like when I've been talking to people in the industry as well, it's all about the collaboration, isn't it, and working together. And so that's a really interesting viewpoint on that one. I'd like to turn now to sort of looking at regulation. So obviously when we talk about things like financial products, regulation is incredibly important. But when it comes to financing and lending, how much of a challenge does regulation pose to these businesses? And when we're trying to like rejig the market, how much of a challenge is regulation to that, or is it just part and parcel, something that you have to deal with, so you just get on with it, sort of thing?
Well, I wouldn't say I'm a regulatory expert, but I've experienced enough to sort of comment on a few different areas. So what I experienced in kind of credit bureaus early on in the day was actually a real drive by the regulators to increase competition. And really, I think the regulators did a really good job in the UK that recognizing that if you are going to increase competition, you need to open up the data sources that historically were sat behind that iron curtain within a bank, and said, no, we're protecting your data and you need to open those up. So then we moved into kind of the world of the open banking era, should we say. Now that's become kind of commercialized massively off the back of that. And I think other businesses have recognized that they can open up their APIs and they can commercialize that. So the early stage regulation that happened to encourage data sharing was brilliant, right? I think it was a genius move. And I think the UK definitely does lead the world in that. What you then need to consider is how quite specific regulations on risk might be either hampering or helping to create new financial products. So again, using a consumer example, what we saw is a huge amount of kind of interest in open banking, but then immediately the regulator sort of turned to sort of say, well, if this data is going to be made available, surely you can use that to do a really accurate affordability check. And affordability being, can you afford to repay the loan that you've taken out? And we're all used to doing that, because if you've ever applied to a mortgage, you know that you need to share your bank statement, and they will sit there and they will highlight, oh, this looks like your salary. Is this your salary? And then they'll say, oh, it looks like your expenses are quite high. And you go through that kind of forensic analysis of your affordability, right, or your incoming and outgoings. So I think regulation on that side is kind of the open banking regulation has helped to kind of streamline that process, so you're not sitting there with a bank statement anymore. But the whole aim is to help the customer, help protect the customer when it comes to kind of repaying their debts. Now, I don't think we're there yet, because I think a lot of people would say that I can afford to pay a lot more. You're just not considering all of the kind of incomings or outgoings. And I've rented for years, so why isn't my rent kind of counted in that? But we're starting to see that data sort of pick up within other credit bureaus now. Rent recognition, it was a good initiative by not the regulators, but HMRC. The BCR competitions helped kind of launch into the SME segment, and we help a couple of banks in that area, Virgin Money being our big one, our big customer, that we're helping to streamline and digitize their lending journeys. So I think other regulations specific to the UK has really promoted that kind of drive towards competition. I think it remains to be seen how the combination of these factors are going to influence some of the new entrants here. So you can't talk about buy now, pay later without talking about the increased pressure now on regulation. And I think what's happened there really is less to do about the buy now, pay later guys don't care or don't recognize that regulation is potentially a good thing to protect the consumers. I think they've just slipped under the radar, you know. At the larger end of mortgage lending, because it's such a huge amount that you're taking on, you recognize that you need to do an affordability check, because you're paying back 800, 1,500, 2,000 pound a month, you know, for your mortgage. Whereas buy now, pay later has kind of slipped under the radar, because all that they're saying is, well, that £75 pair of trainers, you can pay that back in £25, £25, £25 now. So I think the regulators have almost said, well, we'll monitor the situation, but is £75 really going to get my consumer heavily indebted? Probably not. So let's focus on the bigger ticket items. The problem now is that people have racked up the buy now, pay later solutions, just like racking up a credit card debt. And we know how dangerous credit card debts are and how dangerous overdraft debts are. So I'm intrigued to see what direction it goes in. But I do believe fundamentally that data sharing could be a good resolution to that, right? Real-time data sharing. Again, we're starting to see the credit bureaus sharing of buy now, pay later facilities. And it just takes a bit of time to catch up, like with other products that you've seen on the market.
Yeah, it's really interesting. It's really interesting what you're saying about, like the bank statements and affordability and things like that. Because I remember when I did my mortgage application a few years, I literally had to fill out a Word document of how much money I spend on toothpaste and things like that. And it was, why am I doing this? Like, this is ridiculous. But then obviously what you're saying about buy now, pay later and the whole debt racking up thing, I guess that leads really nicely onto my other question, which is, how is the industry working to promote healthy financial habits and discourage overspending? So I think it's that tricky place with financing, that you want to have the financing available so people can afford the products that they want to buy, whether it's a house or a sofa or a car or whatever. But how do you stop people then from racking up that debt, from getting in that sticky situation where it comes to the point where you can't afford to pay things back?
It's a tricky balance. It's a really tricky balance. You can imagine, I mean, working at a credit bureau, I think if you speak to the fintech industry, the credit bureaus are seen as these big bad enemies that sort of contain the data and aren't really there to protect. I think if you sit on the inside of a credit bureau, you recognize that actually the key driver behind a credit bureau is to help with responsible lending. But equally, over the last 10 years, new business models have appeared that don't rely upon you storing all of that data, right? Part of the reason that the credit bureau's got a huge amount of RAP is because they had some big data breaches, right? I was head of open data. Imagine being head of open data when the world's largest data breach happened at a credit bureau. I was trying to drive kind of more open through open banking, not through criminal activity. But I think that kind of rattled a few of them. But needless to say, there was good intentions behind it. An interesting kind of development while I was there is Credit Kudos. Right? Everyone knows Credit Kudos now because they've been bought by Apple, right? They were one of the first new credit bureau, authorized credit bureau providers in the UK for decades, absolute decades. And they were using open banking data to actually unlock new business models. So, or unlock new ways of assessing credit. So I think, as you said, it's the combination of these kind of new data, this new data availability, combination of new challenges enter the market, sitting alongside the more traditional ones. If we can drive towards an industry that doesn't require you to fill out an affordability check to go and buy your pair of trainers, and to kind of declare what you spend on your toothpaste or whatever, I think as long as we can make it in the consumer's interest, and we can almost incentivize them to kind of, okay, data sharing is good, right? Sharing your repayments on your rent could help to increase your credit score. And that increased credit score could help you to actually get access to the finance you need. As long as we're kind of peddling more of that rhetoric rather than, okay, traditional data sources are really bad and credit bureaus are bad, they're not going to change overnight, right? They're there for a good reason. And you sit them alongside some of the open banking sources, then I think everyone benefits. And real-time data sharing, I think, is probably the newest innovation that historically credit bureaus kind of took in batch data on a monthly basis. So it means that your data could be a month out of date, if not 60 days out of date by the time you share it. With open banking or real-time data sharing into a credit bureau, we can instantly kind of verify that you're someone that might be overly indebted, right? You went out shopping last week and you bought a pair of trainers that were £150. You've gone out this week and you've tried to open a credit card. Then little alerts can trigger to that lender to say, guys, have you asked that consumer whether they can actually afford to pay this debt? It doesn't matter whether it's £75 or whether it's £20. That could actually tip them over the edge. So informing the customer at the point of sale about whether they really want the debt and whether they can afford the debt, and to do that in a really non-intrusive way, I think is the key to kind of succeeding moving forward. We're not there yet, but we will get there over time, I'm sure.
Absolutely. And then I guess on the flip side of that, then, how do financing products and services help aid in financial inclusion? Let's talk about some of the good things that they do.
Well, again, there's riddled with kind of examples within the consumer space, right? I think if I take the example of SME working capital and SME lending, there are about 5.5 to 6 million SMEs in the UK. Now, all you need to do is look at what's happened over the last couple of years with the C-bills and the B-bill scheme to give you an insight into what that type of lending can do for businesses, right? It can help them to survive. And sometimes you don't need a pandemic to push your company into financial difficulty. But it just so happened that that was the biggest stress test that we could ever put on the industry, that resulted in the government coming along and saying, okay, I'm going to create the best lending product you could ever imagine, because guess what? I don't even have to underwrite you. You can just have the money, right? So I think in our segment, it can help huge amounts of kind of underserved SMEs and businesses, not just with kind of what we call kind of survival money or survival working capital, but with actually growth capital. And the more innovative you get and the more that you use that data, the more tailored the products can be towards that SME. So you take Trade Ledger, for example, we tried to seek funding when we were early on. The only real way that we could get access to a credit line was for our founder to put his house up as collateral. And even then we could only get access to a £50,000 loan, right? That's barely going to scratch the surface for a business that is intending to grow into a $1 billion company. Hence why we've got such a big, buoyant VC market, right, around the world. But there comes a point where actually the banks should recognize that there can be a hybrid of kind of VC money going into growing businesses and a range of suitable products at the right time, delivered in the right place, at the right price, or at the right speed, to actually support SMEs in their growth journey. And that might be a combination of a bank partnering with a fintech. It might be some of their own solutions. It might be kind of other things that they build specifically. But the impact, if you take the UK specifically, there is about £150 billion of lending to SMEs, excluding kind of overdrafts. And that's what we class as kind of the working capital market share in the UK. Now that could be bigger. I think it will be bigger off the back of B-bills and C-bills, because a lot more businesses will recognize that, oh, lending's not so bad. I thought it used to be bad because I've got my credit card hat on as a consumer, and it goes, oh, taking out lending, that's going to affect my credit score, and it's such a bad thing. It's not a bad thing. It's a bad thing if you don't repay it back, and it's a bad thing if you abuse it. But it's a fantastic thing if you can get access to it quickly, and it helps you to fulfill a big order, or it helps you to survive, and it helps you to pay your staff. So that 150 billion, we would expect that to rise. And even then, within the UK, there's a 22 billion pound working capital gap. So that means 22 billion pound is not going out to those 5.5 million businesses who could need it at a certain point in their existence to fund survival, or to fund growth, or to fund a big order. And that's really where we think the opportunity is in this market. I don't have the stats on the consumer market because it tends to be better served. But if you really go into kind of the niche areas of consumer lending, then you could take someone that just can't get access, right? They don't have a credit profile. Now, is there other forms of data that could be used to underwrite and to kind of give them access to an overdraft, which again could carry them through until the end of the month? Or is there a salary finance solution that lets them get paid earlier? To me, as I said, I don't think it's any different. It's almost comparing like a personal working capital solution to a business working capital solution. It's all working capital, you know, it's working capital to you or I. So yeah, big opportunities. And I think lending is going to play a big part.
Amazing. And then sort of finally then, what's the future? What's going to happen next? What do you think? Say, I don't know, over the next year, over the next 5 years, whatever you think, what's coming next?
I think we're going to see a big shift. I think we've already started to see kind of the hype cycle ramp up, should we say. I'm really impressed with some of the solutions that I've seen from some of the challenger banks. You know, you go into Monzo and you see kind of how they approach lending and credit. It's a really slick journey. It sort of says, look, share your data with me and I'll tell you what you can get, right? I think that's what we're going to see, rather than and we're going to see them partner up with other fintechs, and fintechs are going to partner up with them. I think we believe that we're going to kind of move into the world of embedded lending, or on-demand lending, as you might call it. So historically, branch banking, then we moved into the digital age, And then we're now moving into the kind of on-demand or embedded lending stage, or embedded finance stage. We're going to see a lot more disintermediation from the bank channels. So rather than going to a bank and getting a credit card, you can pick up credit wherever you go. You can pick it up at the point of sale in a store. You can pick it up on an online store. And again, I think we've seen the first wave of that hit the consumer space. Now we're going to see this huge wave hit the commercial space and the SME space. So I'm really, really excited about that. And then I think as a fast follower, you're going to see more and more adoption from big tech. And I think that's the space that they're battling over. Big tech do payments. We know they do payments. They've got a choice to make as to whether they extend that capability out to do payments and lending, and start to do buy now, pay later, or start to do installment loans on that payment. And how high do they go up into kind of SME and commercial banking once they've captured the consumer market? So it'll be interesting to see where they go. I think we'll see a big consolidation in the market. I think fintechs will get bought, and banks will also build their own propositions in-house once they learn what's happening. But I think the future's bright. I think the UK market specifically is seeing huge benefits from regulatory shifts. I think longer term, if the banks don't get their strategy right now and don't sort of hedge their bets over a few different options, it really will become an existential thing for them. I think they could lose huge amounts of market share, and they probably won't see it coming. They'll say, oh, well, I didn't realize that you were taking out a loan out in at point of sale, and suddenly you've got all of your credit products with someone else, and potentially a deposit product with someone else, right? So yeah, 10, 20 years, it could become existential. But I think if banks make the right decision now, then they can start to partner up or work or acquire or build fintechs of their own. But I think it's good for the consumer. I think it's good for the end borrower, whether you're a business or you're a consumer. Huge amounts of competition driving all sorts of different choice for us. So we just need to stick with the regulators, that they will take their time, but they'll catch up, and their intentions are good. But we're going to be well covered by a range of different fintechs and banks in the future.
Amazing stuff. Well, thank you so much, Roger, for joining me today. It's been fantastic to chat to you and learn more about this space. To our audience, if you want to learn more about Power50, head on over to the Power50 website, or you can follow them on Twitter, which is at @thepower_50. But Roger, thank you so much for joining me today. It's been brilliant to chat to you. Thank you so much.
Thank you for hosting, Polly.